Maiju, how are you? Good evening. Good evening. How are you, Maiju? Can you hear me?
Hello. Yes. How are you, Michael?
I'm okay. I'm okay. How is your side? Did you manage to catch this thread?
No.
Okay. Okay. It's okay. It's okay. It's okay. It is okay. So I just want us to which instrument you want us to look at besides VIX 75 and Crash 500?
Uh, Boom 500.
Boom 500. Okay. Um. Let's see. What is happening on Boom 500? How has been the market though?
Uh, I will start to trade today.
Oh, you were very busy.
Yeah, I was very busy last week and last week pattern.
Yeah, it's okay. It's okay. But did you get an opportunity to watch our previous Zoom sessions?
No.
Hmm. So you're behind, man. You're very behind
No, I
because
didn't.
some of the things that we discussed today, it's serious information.
It's about visiting five or about something else.
It was I was simply explaining the whole concept of market structure, the whole concept of how price moves. But I was mainly giving examples using Crash 500, mainly.
Okay, no, I will listen to everything that you say.
So let me just look at Boom 500 and show you the same concept that we were talking about. It applies on any instrument. It's the same thing. Once you understand that
Uh,
there's no way you can find yourself not making money out of the markets. It will be your own choice not to make money.
Okay.
So let's see boom 500 here. Right. So I'll just start from the daily time frame so that I show you what we were talking about.
Okay.
So the other thing, like I think I've been saying this for quite so many times, like try by all means to focus on one or two instruments. When you trade four, five, six instruments, you confuse yourself and you you miss other opportunities on other instruments among those four or five or six. But when you have one or two, you always make sure that every single opportunity that is there, you catch it, you won't even miss it. So what we're talking about, we're discussing the concept of market structure, how the market moves, whether in an uptrend or downtrend. Right. So uh, when it comes to market structure, there is what we call internal market structure and external market structure. External market structure, this is the higher time frame overall market structure. What I mean is I'm talking about this one that we see when you zoom out your chart like this. For example, this was a lower low, this was a lower high, this was a lower low, lower high, lower low, lower high, lower low. So you can actually see that boom 500, looking at external market structure, which is the higher time frame overall market structure, it has been downtrending, right? Once you've identified external market structure, it helps you to know the opportunities that you are going to be focusing on, and as well as identify internal market structure. So what we were talking about, we're simply saying when we are downtrending, for example, here you notice that we're downtrending. When we are downtrending, we expect the market to break the lows. It has to break the lows. That's point number one. And it has to maintain the highs. The highs must never be broken. The lows must be broken. Right? If you check this next lower low here was broken. Lower high here was not even touched. Lower low here was broken. Lower high here, lower high there was never touched. So knowing that, when you know that when we are in a major downtrending market like that in external structure, once you have an understanding that my lower lows must be broken and my lower highs must be respected. Once you have that understanding, right, we spoke about also the concept of identifying a full move. When we're in a downtrend, a full move is the move that we get after the market gives us, let's say, a lower high. After giving us a lower high, a full move is coming from that lower high, breaking the lower low and establishing a new low, breaking this lower low and creating a new low. This move from there to there, this is what we call a full move. This is what we regard to as a full move. So the full move there will be coming from that lower high to establishing the new low, the lower low. So after every full move has been established, the market will always give you a pullback. The pullback, how far it's going to go, is going to depend on the market. So the pullbacks, we have so many ways of identifying how far the pullback can reach. We can use our Fibonacci retracement. Our Fibonacci retracement, what you know, when it comes to the Fibonacci retracement, what you need to know is that when it comes to pullbacks, our first zone that we always target is the 38.2. That is our first eye contact for targeting the pullback. So our first pullback zone that we expect when we are looking at it using the Fibonacci. Let's say you draw your Fibonacci like this, right? You're coming from the high there. It establishes a low. So the first zone that we expect the market to pull back into is 38.2. You know that once it taps 38.2 and rejects from there and starts going, it means that the market structure or the market momentum in that particular direction will be so strong. But if it breaks and goes to 50%, it's also fine. That would be a balanced market. Then 61.8, it's also, so our first major zone, I say it is 38.2. 38.2, we come from the low, from the high, we establish the low at 0%. First zone. So 38.2, it means if ever you are taking buys, the buys here are the counter trend are opportunities. So meaning if ever you're taking buys in a bearish market structure, your first target is 38.2. Second target 50%, third target 61.8. Then you take your sales on whichever zone is respected and rejected on. That's where you take your sales and you continue. First TP 0%, second TP negative 27, third TP 61.8. So once you have this understanding of knowing what a full move is and where the current market is the current market trying to establish a full move, or is trying to establish a retracement? Are we currently in a full move, or are we currently in a retracement? So the full move can go as far as going to test the previous lower high. Once it goes to the previous lower high and fails to break, that market is still a bearish market. That market is still a bearish market. I hope you now understand this based on what we talked about in Smart Confluence Trading 1.0 and 2.0. So we said, even if this market, let's say this market establishes this low and pulls back all the way to this lower high and goes like this is still a bearish market. So long it fails to break here, it's still a bearish market. It's still a bearish market. So long it fails to break that lower high, it's still a bearish market. Mr. Ian is saying sound. I hope you guys can hear me. Is my sound clear? Is my sound clear?
Yeah, you're now
Yes,
clear.
it's clear.
Okay. So looking at Boom 500, I just want to just do a quick rundown and show you the full moves and the retracement. From this low to this high, right? This was a lower high. We came back and established a lower low because this low is lower than this one. So after establishing a lower low, this from that lower high to this lower low, that was a full move, right? From a full move, after every full move, we expect a retracement. A retracement, this was the retracement. It never even reached this lower high. It actually established a lower high because it's lower than that one. So this was a lower high. The new lower high was that one. So our next full move is from this lower high to breaking this low and establishing this new low. The full move was from there to here. After every full move, we expect a what? A retracement. Retracement, it never even broke this lower high. It established a new lower high. Our next full move is from that lower high to where? To breaking this low and establishing a what? A new
Lower low.
lower low. Right, wonderful. A new lower low. We can say this is our new lower low. Lower high, lower low.
Okay.
So already you can see that we are coming from a full move. After coming from a full move, we expect a retracement. After coming from a full move, we expect a retracement. That retracement, you can use your Fibonacci, you can use support and resistance, you can use your supply zones, you can use your order blocks, you can use your fair value gaps to know how far it's going to go. For example, here, looking at where the current market is, right? Looking at where, let's just look at where the current market is. If we look from here, if we look, let's just start from here. Starting from here, we can see that our major lower low was this one. Our major lower low was this one, right? This one. So after that major lower low was broken, that is what we call a break of structure. After a break of structure, after that break of structure, let me just label it there. Break of structure, let me just label it. Break of structure. That's a break of structure. So after this break of structure, the market isn't fully retraced to any major zone here at the top. That is because the market is simply trying to establish a lower low. So the lower low, how is it confirmed? It's confirmed by the shift in market structure. Once we shift in market structure, it confirms that that level is now a lower low. How do we shift market structure? By looking at internal market structure. Internal market structure I'm referring to, for example, here, coming from this lower high to this lower low. How was this zone confirmed to be a lower low? It was confirmed by the break of internal market structure. Internal market structure, you're looking at your previous lower high internally, not externally. You're now looking at internal market structure. The previous lower high was this one, according to internal market structure. Previous lower high according to internal market structure was this one. Once we manage to break that internal market structure lower high, this level it's qualified and it's authorized and it's verified to be a lower low for this external structure, right? I hope you understand me on that one. So same as
Yes,
here,
I do.
as we are flowing here now. So from here, where is our lower high? Our major lower high is this one at the top, right? I hope we are together on that one. Major lower high, because it broke structure there. Our major lower low, where is our major lower low now? We want to look and identify a level that where it broke internal market structure and gave us a new market structure. If you check here, it failed to break this previous lower high. If you check, it established lower high, lower low, failed to break. This is now internal market structure that you are looking at. The reason why you're looking at internal market structure,
Okay.
you want to identify where is my major lower low. Once my major lower low has been established, the market is going to pull back up. If you check as it was moving, so from there it failed to break this lower high, came, established the lower low here. This is internal market structure now. Lower low here, came and established, failed to break this level. If you check that other level, it failed to break that internal market structure lower high. That's an internal market structure lower high. Established it, established a lower low, failed to break this level. Same as here. So now looking at where we are now, looking at where we are, looking at where we are, looking at where we are, we can actually see that the recent lower high according to internal market structure is this one. This one here. This is the lower high according to internal market structure, because that was this is the movement. Lower high here, lower low, lower high, lower low, lower high, lower low, right? So already, so the first sign, signs that we are about to go up, the signs that we are about to go up, we have to start to see either, number one, either we have to start to see higher lows, or we actually need to see the break of this lower high to establish a new a new market structure, which will now be what we call a bullish internal market structure. Once you have that bullish internal market structure, that is what is going to give us a pullback after that major external market structure full move. So this level here, it's a very significant level. If ever one is going to take buys, that level is very significant, because if the market comes and fails to break this level, it's still going to continue selling. So, but if it breaks this level, it means this low here, it's established now as our major lower low, our major lower low for the external structure that we were looking at, for the external overall market structure that we'll be looking at. If ever this market comes and breaks that, it will be established. So this will be our lower high, lower low. So how far the retracement is going to go, let's say once it has been established, this one, once it has been established as our major lower low, how far the retracement is going to go, use your Fibonacci, the same way I explained to you just now. Fibonacci. So what we are expecting is simply a retracement. We are simply expecting a retracement, since we have seen that overall market structure is, overall external market structure is bearish. So as I said, our first target when it comes to entering those positions will be 38.2. If you check 38.2, it's also somewhere around where this previous internal market structure lower high is, which is actually a good thing. So if it comes to this and fails to break there, it will simply continue selling. But if it breaks there, if it comes and breaks this internal market structure lower high, this level will be confirmed as our major external structure lower low. Then it means we are going to have some form of bullish market structure giving us a pullback. I don't know how far the pullback is going to be. The maximum level that the pullback can reach is this 100% level. So long it fails to break here, that the market overall, it will still be in an overall bearish market structure. One can even take their sales from the top there. If it comes at the top there and fails to break there, sales can actually be taken. Sales can actually be taken nicely from there all the way to the previous major lows. So there, that's the maximum level that we are looking for the retracement to reach, right? Let's look at other levels where we are looking for the retracement. 50%, we expect the retracement to reach 50%, right? Another level, we're looking at 38.2. 38.2. Another level, let's look for another level. 78.6. On 78.6, it's also a beautiful zone, because you can see that there is a supply zone there. So these are my major zones that I'm looking at for the pullback to reach to. These are the zones that we're looking forward for the pullback. So it means now there are two ways that we're going to enter buys. We wait for the break of counter trend lines. For example, we can have a counter trend line from the top there. We can draw a counter trend line. Already you can see that that counter trend line is broken, which is a very good sign. Very good sign that most probably the buys are now safe to enter. So this break of this counter trend line is going to be our first indication that most probably so remember, first target is 38.2. This is a daily time frame. You can hold your trades as far as 38.2. Your entry points, remember, we use our lower time frames for our entry points. That doesn't change. So I know that once we get our entry point on the lower time frames, we are going to hold this trade all the way to 38.2. 38.2, if we break, we're looking at 50%. Once we break, we are looking at the next level, up until the maximum level is 100%. Right. So the first sign, I have this counter trend line has been broken. That's my first sign. Already I can actually tick and say my first sign for buy entries has been established. So what I can now do, I can go to lower time frames. I can go to my 4 hour. Going down to my 4 hour time frame, I'm now looking for confirmations for entry. I'm now looking for confirmations for entry. I'm now looking for an entry point for my buys. Once I get that entry point, we are going to hold those buys up until we reach the 38.2 level that we established, that we marked according to the daily time frame. That is how you can actually manage to get the maximum returns out of your trades. What can actually help you to get maximum returns out of your trades is what I'm actually showing you now. This is how you can establish and get maximum returns out of all your setups. Every setup has a full move and a retracement, as I've shown you. So when you enter and come out and enter and come out anyway without having this knowledge, you won't even reap the maximum benefits of your positions or of your setups. So looking at the 4 hour time frame, what we are seeing here, it's what we call internal market structure. So looking at internal market structure, our first sign here, according to internal market structure, remember, internal market structure is different from external market structure. This is the immediate structure that you'll be seeing. That's what we call internal market structure. Let me just put this like this. Right, that's internal market structure. Right, so lower high, lower low, lower high, lower low. This is internal market structure. We are going lower high, lower low. Right, lower high, lower low. From here now, check what happened. This lower high was broken here. Can you see that?
Yes.
Right, that zone there, we mark that zone. That zone is what we call, one can call it a shift in market structure. You can label it and call it shift in market structure, or that's what you can call your chalk. Your chalk, that's your change of character. Whichever way, you can even put a line without even labeling it. So far you know what that zone is. So this is our internal market structure change of character. Change of character, right, like this. So once we have that, that is our first sign for buy entries. So for example, this trend line it's a trend line based on the daily. So if ever you look at, if ever you were putting your trend lines according to this, you would have actually started buying this boom 500 here. You could have actually started buying boom 500 there where I just marked now. You could have actually started buying it there. So buying here, obviously you're looking for your target as this daily trend line. So once we have this chalk here, or this change of character, what we expect is a pullback either into a demand zone. This is a demand zone. This was our demand. This was a demand zone. So it came, pull back first time, second time touched our demand. That was also another entry. So first entry you could have gotten based on this trend line. After breaking out, you could have gotten your buy. This buy you could have held. This was almost 2 or 3 days of holding. Then for the targets of this buy, you could have looked to the left. If you check this level here, the market actually reached this top level. You could have actually used this as a target, or this trend line here, of which it didn't reach all the way there, but this was actually a good target there. So after your target was reached, you always expect a pullback into the demand zone. Once we pull back into the demand, we expect a continuation up. So now what we are now looking forward to is simply a continuation. So if you check now, looking at internal market structure, if you check this previous level here, that was a break of structure. Now that's a break of structure. After a break of structure is similar to a chalk. We expect a retracement into a fair value gap, or into an order block, or into a resistance, whatever. Once we have that break of structure, so these things, they work hand in hand. Break of structure is also coming in confluence with the break of this of this trend line here on the daily. So where is our next zone now that we're expecting entry? We can also have another trend line coming from the bottom here. This can actually guide you for entries that you might want to enter. If you check, this is a very beautiful trend line. Touch. Once the market comes into your trend line, you can actually get your buys there. You can actually get your buys there. Getting your buys there, you know the target now. Now we'll be targeting. What are we targeting? We are targeting to hold all the way to this zone. This zone is our 38.2 level here. So as it will be moving going up, what you'll be doing, you just shift your stop loss the first level. Once it comes and breaks the previous high, once this market comes, respects this zone and comes to your previous, and comes and breaks here, once it breaks this previous internal market structure high, you can shift your stop losses to break even, or you can even lock some profits. Once you do that, you can hold the trade all the way up until it reaches the level that we actually anticipated on the daily. So right now, first entry I showed you, it was this one. Second entry, it was this one. So for our third entries now, we're looking forward for, if ever it comes into the trend line here, if it comes and touches our trend line, this one, we can also enter our buys. We can also enter our buys around this zone here. Around this zone, we can enter our buys. Obviously, you enter 30-minute, 15-minute, you can actually enter your stop loss below the trend line. So once we break this previous high, you can shift your stop losses to entry, or even lock some profits. Then first major target, as I said, is 38.2. 38.2, that's your first major target. So this is actually a trade that we're expecting to hold. It's similar to almost the crash 500 buy that we gave. It's also a trade that I'm anticipating to be actually be held for a very long time. So right now, you simply wait. Right now, the only thing that you need to do is wait. Once you have done your analysis all like this, and you notice that the market it's away from your entry point, for example, here, if it was here, you would have bought there. If it was here, you would have bought there. But now you can't buy just in the air like that. You wait for the market to come into your zone. For example, we are expecting it to come into the trend line. Once it comes into the trend line, we can enter our trade there. So going down to 1 hour 30 minutes, you are simply going there to confirm your entry point, to get other more confirmations for your entry point, So here we are. This is 1 hour. 1 hour. Let's refine. So 1 hour. 1 hour. Let's zoom in and see. So here you can even add your 50 exponential moving average. This is just an additional confluence. But once you have this understanding, you don't even need it. Sometimes you don't even need it. So right now, we're looking forward for the market to come into this zone, into that zone. So if you look here, if you look to the left, you are looking at this immediate market structure. If you look to the left, try to look for a fair value gap or an order block. If you check this level here, for example, this level here, it was actually tapped. This was a demand zone or an order block. The market went up, came and touched it. So that one is no longer relevant because it might not come all the way there. If you look here, this is also another level here that I'm having. This is also a demand zone or an order block. So it can come and touch this zone and go up. It can actually come and touch here. So if it comes here, what you simply do now, if it comes here, wait for it to bounce here. Once it bounces and closes above your trend line here, you enter your trade, your stop loss just below the level here. That's how you are going to enter there. That's how you are going to enter this one. So there are so many ways to enter this trade. So many
Okay.
ways to enter this trade. So many ways to enter this trade. Or you can also look at a counter trend line that is going down. A counter trend line that is going down, you are taking it from the top, touch, just in case the market doesn't come down, doesn't come all the way down. You have this counter trend line here. This counter trend line, once it's broken, you can as well enter your buys. So those are so many confirmations that you're actually having for that buy. To say once it breaks my counter trend line, I can buy. If it comes all the way down there, so here that would be a perfect entry zone. This one, once it comes all the way down here, once it comes all the way down here and rejects here on this zone, once you get a rejection here on this zone, enter your buys, your stop loss below the level. Once you enter, even this counter trend line, once it's broken and retested, you can even enter more buys there. You can even enter more buys, then hold all the way. This one, you can use it as a lower time frame first target, a lower time frame first target. Then if ever you want to hold all the way, like what we said, you can hold all the way to that zone that we marked at the top. But so far, this is what is currently happening. Don't buy now. Wait for the market to come, especially once it comes into this zone. Once it comes into this zone, that would be a very beautiful entry point there. I hope I'm making sense. Do you understand? I- Do you understand, my Jew?
Yes.
Right. So that is that is what we're talking about. That is what we're discussing. That is the whole nature. That is the way in which the market moves. Once you have this understanding, once you master what I'm telling you now, there's no way you can find yourself in losses, or you might. There's no way you can even miss opportunities when you have this understanding that I'm actually showing you now.
Okay.
So now it's just a matter of patience now. It's just a matter of
Mm.
patience. Just a matter of patience now. You're waiting for the market to come. Once it comes into your zone, enter. Once we get the rejection, 30-minute rejection, once we get the rejection and the candle closes above our zone, we enter, stop loss tight
Mm.
below the zone. Then we hold. We just hold.
All right.
So that is it. That is it. That is it. If you have any questions, you can ask before we wrap up.
No, I don't have any question.
Wonderful. So we'll meet again. I think by tomorrow this thing would have come all the way down here. I think by tomorrow it will be down here.
Okay.
So that is it. That is it. We'll see each other in the next session, where we are going to see how far the market actually, how it performed according to what we analyzed. So that is it. See you in the next Zoom session.
All right. Thank you, Michael.
You're welcome. You're welcome. You're welcome.
I lift my hands to worship you. Break down. I worship you. Sing worship, yeah, yeah.
You are so good to me. You are so good. Father, I worship. So that is the whole matrix, guys. That is the whole matrix. I hope, I hope you are understanding. I'm going to continue with this matrix, the market matrix series. I'm going to continue as much as possible and actually bring you this understanding. This is one of the secrets that I've been using for so many years now, trading the financial markets, and I'm actually bringing this knowledge for free to you here on YouTube. The best that you can do is to like the video, to share the video, and to subscribe to the channel. That's the best that you can do. If ever you want to be part of my team, my Smart Traders International team, feel free to WhatsApp me directly in the WhatsApp number that is in the description below, as well as join our free Telegram group through the link that is in the description below. We also have a Discord link. We also have a Discord link that is in the description below. Feel free to join that group. Feel free to join that group. That is a group of people where we'll be discussing, people sharing their ideas and also their views, what they will be seeing on the market. So feel free to contact us and feel free to be part of our team. Till we meet again in the next video. Thank you for watching.